Hello everyone. Let us continue with our discussion. And till now we have done, I think, the beginning portion of the digital assets. But now we will cover up it in more detail. And till now, I tell you what we have done. We have covered up in detail the DLT, that is your distributed ledger technology. We have done it in detail. Clear? Apart from that, we have covered up the concept of digital asset, at least at the basic level. Clear? And we have understood the concept of blockchain. And I've spent lots of time on consensus protocol, that is proof of work and proof of stake. And then we have moved to permissions and permissionless network. Clear? These are the area we have done in the previous two lectures. Now we are coming to the third one. Clear? So give the heading digital asset categories. Digital asset categories. Digital asset categories. Clear? Now over here we have completed at least the chart in the previous lecture, that is your cryptocurrencies and tokens. So in the cryptocurrency we are going to study bitcoins, then altcoin and some central bank digital currency, and in case of tokens we will cover up the non-fungible tokens, security tokens, utility tokens and governance token. Clear? So let us begin our discussion with the first point, that is the cryptocurrencies and its different forms. Clear? So now give the heading cryptocurrencies. Give the heading cryptocurrencies. Now my agenda is not just the exam. So you will see that I will cover each and everything in detail, and I will dig inside each and everything point by point, and even you can take down the notes and how it is relevant and applicable in your real life. That is also my agenda. Clear? Now just like we have physical assets, whether it is a gold, it can be land, it can be cash. Clear? These all are physical. We can see them, we can touch them, we can feel them. But in this digital world, in the world of AI, in the world of technology, we have designed our digital assets. Even you have seen the shares. Now they are also in the digital format. In the digital formats means you have a depository. There you will see that you have Infosys 100 shares. That is your depository, where you can see that this is your asset. You have 100 shares of Infosys. This is your asset, and it is stored in your demat account. It can be with the CDSL or NDSL. Clear? So whoever keeps it, you have the right to sell or buy your securities whenever you want. Clear? And these are totally live. They are operate entirely online. Clear? Now to take our discussion ahead, we have also discussed, that is DLT, that is your distributed ledger technology. Clear? Now think it like a supermarket, a live supermarket in which you have a ledger, and it holds a smart online database. It's a smart online database, means whoever will buy from the supermarket, how much you have actually paid for the amount for that particular product. Clear? There is no cash required. It's completely online. Clear? Now when it comes to the mind cryptocurrency, what comes the first? Bitcoin. What comes the This is something which comes upfront in your mind. Bitcoins. And one more name, Ether. Another name is Ether. This is a second name which comes to our mind when as soon as we listen cryptocurrencies. Clear? Now these cryptocurrencies are basically the digital currencies. They are digital currencies. Clear? They are the digital currencies. Clear? Now they don't come from any government. Okay, neither any central bank. These are private. nor RBI, no USFD, no Indian government, no US government, no European or Japanese government. These are completely private in nature. Private means I have designed this asset and now I am transferring it to someone else. Means I said that this particular note, okay, this is a note, and I said it is worth of $100. It's not a currency, but it's just a small paper, and I've written $100. This is my own currency, and I've given it to you. Now you have that $100 in short, and you can convert into cash whenever you wanted to, but through a different medium. Means if you'll go and take it to a bank, it won't work. If you'll go and take it to a bank, it won't work. The bank will not give you $100. Or if you'll go to a shop and give this $100 note and ask for the goods for $100, it won't work. It will work on on a specific platform, only on a specific platform. That also we are going to cover up in detail. Clear? Now let us assume that I want to send 5,000 rupees to one of my friend in US. Okay, now how can I do that? Wire transfer, via bank, wire transfer via bank, or I have to take the help of some third parties like PayPal, and they will charge me a hefty percent of, say, 10% commission for transferring the amount from India to US. Clear? So it's very costly. It's very costly. Then I come up with an idea. Hey friend, can I send you the bitcoins? For that, I don't need a bank. I don't need some third party. I can directly send it to your wallet. I can send it directly to your wallet, and then you can get it cash whenever you want, wherever you want. Clear? And right now, many shops, many online gaming agencies, many are actually considering this bitcoins as a cash. Clear? Now, if for this I am sending coins. Now, there is one point, the value of these coins are increasing and decreasing. Sometimes increase, sometimes decrease, very volatile. Means today I have sent this 500 rupees to you. There is a possibility that within 30 minutes, the value of these coins might increase to, say, 6,000 rupees or might decrease to 2,000 rupees. Any of the possibilities there. Means I have sent 5,000, but the moment you received, it become 2,000 or it become 6,000. Clear? So it's very important to understand that these bitcoins are not that safe. They are highly volatile. Clear? Hope you understand this. Now over here we have bitcoins. Clear? Bitcoin is the first and still the most popular one of transferring the money from one place to another. Clear? And then we have the Ether. This is again the second one after the Bitcoin. See, these all are privately created coins, so I can keep the names the way I wanted to keep them. Clear? They are not authorized by any government or any central bank or any agencies. Clear? And after Bitcoin, this is the second most popular coins, and it is useful for smart contracts. It is useful mainly for smart contracts. Clear? Now I will discuss this in detail in a most practical manner so that you will understand this. Clear? Now suppose you are sending rupees 5,000 to your friend in USA. Clear? So one way is transfer that money with the help of PayPal or some bank transfer or Swift. So there is a high transaction fees of 5 to 8%, and sometimes it will take 2 to 5 days to get the money. Okay, so it involves time. The traditional method involves time as well as huge amount of cost. So what I'll ask you, do you use bitcoins? And if you agree, I'll send them bitcoins. I will send them bitcoins equivalent to 5,000 rupees. I will send you bitcoins equivalent to 5,000 rupees. Now suppose that the value of one bitcoin, I'm just taking as an example, okay, the value of the one bitcoin is, say, 2 rupees. Okay, one bitcoin is of 2 rupees. So how many bitcoins do I need to send? 2,500 bitcoins. I will send it to my friend. Clear? So basically there is a wallet. There is a wallet of mine, and it's a wallet. This wallet is specifically designed for the bitcoins, or you can say cryptocurrencies. Not only bitcoins, like this there are many coins. So I am transferring the bitcoins. Why? Because it's more popular, widely used. Even if you'll give it to your friend ahead, they will accept it. Clear? Now this is the wallet of my friend. So what I'll do, I'll transfer this 2500 bitcoins to you immediately, and now you can sell your bitcoins in an exchange. There is an exchange on which the bitcoins trading is going on. Someone is buying, someone is selling. So now you are selling it, so you will get the rupees of 5000, but what if you will sell it tomorrow? I have sent it to you today, but today you got busy and you are selling it tomorrow. Clear? And tomorrow the value of one bitcoin increase from 2 to 3 to 3. You become very happy, because now this 2500 bitcoins is valued at 7000 rupees. 7000 rupees. Clear? Are you clear? So 7500 rupees. So values are fluctuating. Or what if the value of the bitcoin decrease from 2 rupees to 1? Then this 2500 bitcoins will give you 2500 rupees. Means it got decreased from 5000 to 2500. Are you getting the point? It's very volatile, it's fluctuating. You can make money or you can lose money. Now why the price is fluctuating? It's totally demand and supply. The higher the demand of the bitcoins, the more the value of the bitcoin. So you can keep it as an asset. Means you have purchased the bitcoin, say at the rate of rupees 2 per bitcoin, and might be after 1 year, because of the high demand of this bitcoin, this 2 rupees will become 15 rupees and you will make huge amount of money. Are you getting the point? Now first, it's very simple. The process of sending the money to anyone, it's quite simple. It can be done within 10 minutes. Clear? It will just cost you few rupees as a network fee of while sending the money. Definitely there will be some charge, but that charge is very minimum. But in case of PayPal and Neft and some other ways, it will cost you 5 to 7%. But over here it is 0.05%. Very low cost. Clear? And no intermediaries, no banks, no government, no one is involved. Directly transfer it to your friend. Clear? Now when you are selling this bitcoin, you can sell it via some exchange. Okay, so what are those exchanges? The name of the exchange, write down Wazir X. Basically these are the apps which you can download and you can start trading in the bitcoins. If you find any bitcoins to be most valuable to you, and after 5 years you can think the price of the bitcoin can go up, definitely you can buy this asset and keep it with you. But very risky. Again I am saying it's very risky. Clear? Like this, we have one more exchange, that is coin DCX. This is also an exchange where your friend can go and sell the bitcoins. Clear? So it's totally up to you. Clear? Now wallet. Let us come to this wallet. Where I will get this wallet? Now you see that there are many wallets. And I'll share you few of the examples over here. Okay, so write down the name of some popular wallets. Okay, number 1, hopefully you can see on the screen. It is a Trust Wallet. Clear? Now this is basically a mobile app. Okay, second one is your Exodus wallet. It is a combination of both mobile as well as desktop. Means you can utilize it in your laptop, computer as well as on your phone. Clear? Now we have is a coin-based wallet. Clear? Now, it does not operate as a exchange, but it just operate as a wallet. Means with this wallet, you cannot buy or sell. You can just store your cryptocurrencies. Then we have a WazirX wallet. This is a India-based exchange. Clear? It includes both the wallet as well as exchange. Means over here, you can save it. Clear? As well as you can trade, buy and sell, both are possible. Clear? Then we have is a ZepPay wallet. This is also India based option. Means I have given you some example of the wallets. Clear? Now the wallets example which I have given to you, they are known as hot wallets. Hot wallets. Clear? And we call them as, why we call them as a hot wallet? Because they are software based wallets. Clear? Now another type of wallet is a cold wallets. Clear? Now cold wallets are opposite of this hardware wallets. Now the point is why we are creating two types of wallets. See, this hot wallets, that is the software based wallets, they are always prone to cyber attacks, cyber risk. There is a very big possibilities because all your keys with respect to cryptocurrency, that this 100 bitcoins belongs to you, 100 bitcoins belongs to you. Now these 100 bitcoins are stored in a wallet. Clear? And there is a possibility that someone will come and they will steal your data. Cyber attacks are possible. Clear? Now many have invested huge amount of money in the bitcoins and cryptocurrencies. Now they want to stay safe. They want to stay safe. Rather than keeping it online, they want to keep it in, say, pen drive. I am just giving you one example, say pen drive. What is this Bitcoin is? It is basically a private key. Private key. What is this Bitcoin? This is nothing but a private key. So if you have lost your key, if you will lost your key, you have lost your entire Bitcoins. That's the thing. So you want to keep it safe. You want to keep it safe so that you can recover it whenever you want. Clear? So software wallets, we have seen the example. Like this, we have two popular hardware wallets, or we can say cold wallets. Now these information are not there in the textbook or the GARP Institute material or CFA Institute material. I'm giving it from my side so that you will build a strong knowledge base in the cryptocurrency. Clear? We call this as a ledger, nano, S and X. These are the two version, and then another example is Trezor. Clear? Now if you'll ask me which one to use, I see if you are a small trader, then this software wallet is good. Okay. But if you are a large trader, okay, if you are a large trader, then you should go with the hardware wallets. Clear? So for whom this hot wallets are useful? Basically the beginners or the regular traders, because if regularly you have to trade, you need your data on the exchange for the live trading. But suppose you want to sell it after 10 years. For 10 years you don't want to even see it or you want to touch it. Clear? You can keep it safe in your pen drives, in your computer, in your mobile phones, in your system. All you need is just to safeguard the private key. Clear? Are you getting my point? Now, who have actually designed this wallets, this Ledger Nano S and X? They are designed by the French company called Ledger. Okay. Now they are just the physical device, just like I have given you an example, just like a USB pen drive key, which actually stores your cryptocurrency securely offline so that hackers can't access it via online. Clear? So if you lose the key, you will lose your crypto. Clear? So Ledger will store all these key offline, making it hard to get hacked because now it's in your pen drive. So no hackers can achieve it. Only the thief might take your pen drive and run away. So that's a different case scenario. Now over you see there are two different versions, S and X. Clear? Now S is the very old version. Okay, it came in 2016, but this is the most advanced one. It came in 2019, and this does not support the Bluetooth and all. But yes, this can be connected via Bluetooth to your phone. Clear? And very few apps are possible in the S, but over here you can store up to 100 apps, and the price is also very less, like 6 to 8,000. But X comes with the price range of say 12,000 to 15,000. Clear? So if you are a beginner, go with the hot wallet, and if you want to sell it immediately on a, or you can say live trading, go with the hot wallet. If you want to stay safe for a longer period of time, or you have a huge amount of money stored in the bitcoins and you want to stay safe, then use the hardware. Clear? That is best for everyone. Are you clear? Now, the purpose of digging inside this, if you'll study from top, you will not understand how things are happening, but now you get an idea that how things are working. You can do one thing just for a practical exposure or to understand things in detail. Just download the WazirX app, step by step sign up, see how many bitcoins are there, what is the price of the bitcoins. Even you can put your 5-10 rupees and you'll see how many bitcoins you can see, how many bitcoins you can purchase, how they are fluctuating in the price. All these are possible. Clear? Even by a small amount of investment, it's totally up to you how much you invest. It's totally up to you. Take a very informed decision. This is just for learning and tutorial purpose. I have given you so much of details. Clear? I think this whole session, this particular lecture belongs to only one paragraph if you look as per the book, but everything will be covered in depth like this only. So I'm keeping this lecture short, means I have covered the concept of cryptocurrency, okay, in which I have discussed the two most relevant currencies like bitcoins as well as ethers. Clear? And in the next lecture we'll carry ahead with other types of coins like altcoins or central bank digital currencies and tokens and much more. Clear? So I'm closing this lecture here only. Thank you.